Welcome to this week's market drama. We'll begin with the S&P 500, which was down 1.4% for the week. It is now up 20.1% for the year. NASDAQ was down even more, down 1.5%. It is up now 21.5% year to date. There's a couple drivers here at play for the sell-off, the second week in a row that we had market sell-off. The first one is volatility ahead of elections, which is coming up next week. No doubt that has an effect on markets, and we saw that because treasury yields continue to go up higher this week, right? So there's kind of a angst around elections. But then there's also other data points that you could point to that more directly. So one is we had on Friday, we had the Labor Department report, non-farm payrolls. It essentially was unchanged month over month, much lower expected job growth that was anticipated. Having said that, there was two large factors at play: the labor strikes at Boeing and the impact from hurricanes Helene and Milton. Right, so the numbers are really messy, and for that reason, one, it was worse than expected, but two, it's hard to read exactly then when we would land without those two kind of one-offs, if you will. Outside of that, when it comes to earnings season, we did have a couple of big tech companies report, like Microsoft and Facebook. They did fairly well when it comes to current earnings, but there were concerns about lowering guidance for earnings next year and an increase in capital expenditures, specifically with AI spending. The market's kind of reading into that as how much would that yield into future earnings, right? So it did kind of give an excuse for the market to sell off, especially NASDAQ, tech-heavy index. So heading into next week, that does give us two big items to look at. One is we have the election on Tuesday, and on Wednesday, the Federal Reserve has its meeting, and we'll see if they lower, if they cut rates by 25 bips, they cut it all, they cut by more than that, and also what commentary they'll have after they have their announcement. So that is it for this week. Stay tuned for next week.